All right. We are live here with Sylvia. Could you introduce yourself?
Yes. First of all, thanks for talking to me today, Friday afternoon. I'm Sylvia Jablonski, and I'm the CEO and the CIO of Defiance ETFs. And we are an ETF company best known for thematic and enhanced income investing. I've been doing this for a long time in terms of like working in the ETF space. My background was basically equity derivatives trading, and then I worked at a levered inverse ETF provider, and here I am today with my three partners. Our founder Matt and Jacob and David and I are trying to run this awesome ETF company. So that's who I am.
Awesome. And what is your position?
Yeah, so I'm the CEO and the CIO of the company. So
Okay.
I work on everything from the products to just getting investment ideas out there about the products, education, strategy, just kind of anything and everything that is interesting about Defiance, trying to bring it to the people.
Mhm. It's funny you said that because when I was looking up, I'm like, I was looking up your name and I'm like, is she the CEO or the CIO? And it like your LinkedIn profile will say something different than just a regular Google search result. So I'm like, maybe you can only have one designation
Yeah,
based on the
I think
profile you're using.
yeah, it's like super interesting because I see that too. I think when you get a lot of like titles or even long titles, people just kind of like pick one and yeah. And, for us, it's not, we're such a small team. So, the truth is like the title of what I do or what my, co-founders and partners do, just doesn't matter. We all do everything we can to, kind of like run the company, come out with great products and do things like that. So when you're small enough, you're all kind of the jack of all trades, right?
Now you say small. What is the what would you say the value, not valuation of the
Yeah.
Defiance fund, but what do you guys, what's your holding?
Right. And so we're a small team of people, but I would say punch quite above our weight class. So we have about 1.4 billion in assets
Woo.
across our various products. So we're certainly on our way and in growth mode and trying to get some great products out into the market.
Cool. I have a list of questions for you.
Okay.
And some of them actually come from X or Twitter or whatever you want to call it.
Okay.
That is, I don't know if you know this or not, but your Twitter profile needs to be updated because there's like nothing on there.
Yeah, I know. I have to get with it. So it's interesting because in my industry, and it's really no excuse, but like we're so highly regulated that like
You can't.
you can't really just like freely tweet.
I
And
know.
so I kind of try to keep my communications through, through our company or like through LinkedIn and things like that. But point taken, because I think as we grow, I've certainly connected with a lot of people on there. And so I plan to do more, but thank you.
You know what it is that there's no other, so not to pat myself in the back, but like I'm all over. I have 94,000 followers on Facebook. I have like
Yeah,
20,000 on Instagram. All these other social platforms, no one likes to talk about finance, with the exception of like Wall Street Bets being like a one
right.
group on Facebook. Twitter, everyone is like out for each other. They're there to help you. And there's a huge
Yeah,
finance community on Twitter. I love it.
there
I
is.
feel like I finally found like my peers of people that understand options and trading, and just like they're all into it. And that's where I think like these growth companies, like for instance, I've had Jeppy reach out to me and they want to do a similar interview. They send out t-shirts and they are, it's I would say it's bringing a lot of attention to the funds, is Twitter space.
Yeah. It is. And I think, it's really interesting. And throughout my career, this isn't something that we had easy access to, right? So I think when you work in the ETF space and for the last like 10 and 15 years, most of the information that you get about your products, like whether it's the satisfaction or dissatisfaction, or just like what could make it better, what could make it worse, usually came from talking to institutional types of clients, whether it was like hedge funds, RAs, and things like that. And that information is just completely it just useful and valuable and helps companies grow and strategize and do things like that. But I found that since I started engaging with like X and the different social media platforms, it's just really awesome to talk to people who are like really really in the weeds, like very interested in options trading, very interested in the details of the products, giving us feedback on like, hey, we like that you guys did this, but we don't like that you did that. Next time you launch a product, can you think about it this way? Or I love it this way, don't change it. Just the amount of information that we get in terms of like how we could be, more collaborative and just, getting great feedback is just, I mean, it's just great. It's really great.
T-shirts with a personalized note with like, I don't know, maybe your favorite QQQY, whatever
Yeah,
it is, with your favorite fund on the T-shirt,
we do
promote on
that. We can
X.
do that for sure. We can do
Those
that for
are,
sure.
it's so hot right now.
Yeah,
A lot of people love that.
we can do that for sure. We do that. In fact, we've done
Oh, you
that.
do?
Yeah, for sure, for sure.
Okay.
So we've done things like, top 10 questions or something like that, or like the first people to write in with the top 10 questions, or like just pull a name out of the hat from one of the listeners and things like that. We've definitely done some stuff like that. We're happy to.
So who do I need to follow to see these questions? Because I haven't seen anything.
Oh, you mean in terms of, no, I just meant like when we're doing things like this, like
Yeah.
when I'm speaking with, if somebody asks a bunch of questions, or if you have someone who you're asking
Gotcha.
questions for, and you say like, hey, I'll give you a t-shirt if you have a good question. We've done things like that.
Okay. All right.
Yeah.
Where does the Defiance name come from?
Oh, so this is a good one. And I think we've probably got the best story out there. It might be a little biased, but Matt Belsky, our founder and chairman, is the grandson of the Belsky brothers. So the movie Defiance,
Yeah.
which is Liv Schreiber and Daniel Craig, is about,
Awesome movie.
two heroic brothers rescuing Jews from a concentration camp. And so it's a story of heroism and leadership and humanity and these amazing human beings. And so he's the grandson, and it's very much a family legacy and a family motto is not the right word, but just ideal to live up to, right? Defiance and bravery. And so we're named Defiance after that.
I love it. Okay. Who does this fund target? Like who's your target audience?
So, it completely depends. The income funds tend to be more retail oriented. So, QQQY, JEPI, IWMY, SPYT, those are funds for investors that are looking to, receive enhanced income, right, on an annualized basis. They take the income every month, and, the majority of them reinvest it. Some of them, if it's like SPYT, they take it out and, live on some of it.
I'm in the
Yeah,
reinvesting
there's been a
category.
strong retail pickup on those products. And then the thematic products have just been everything. I mean, institutions, hedge fund, like anyone looking for exposure to diversification within AI, machine learning, and quantum computing, they'll use the quantum ETF. And there's also a huge amount of retail holdings in that one too. And, just talking about Twitter, like the different like spaces and things I've done, it's just been a lot of feedback from young people that they view, quantum computing as the next generation of technology. And so it's really a pretty broad span of clients that we cover.
So that quantum computing, say in, I don't know, 10, 15 years, right? When
Yeah.
everyone has basically AI at their fingertips, they have a personal AI washing their dishes, whatever it ends up being, will that kind of fall in line?
So I mean, I have
Is
a,
there
I
is there a
believe that,
is there
you know,
potential for that? I should
oh,
say.
sorry. Yeah, so we launched quantum and we launched 5G in 2018. Nobody was talking about AI in 2018. They were talking about 5G, and that took off right away, right? That's like the future of tech connectivity and things like that. There was this, strong pickup on that. Like you're going to need 5G in order for self-driving cars to work, in order for smart cities to operate, in order for, defense systems and military and things like this. And so I think people got the 5G story really quickly. With quantum, it was interesting because at first nothing happened. And then, there was like the chat GPT moment where everybody started talking about AI. So in my mind, like this is, imagine if you had bought NVIDIA and some of these semiconductor stocks 2 years ago, when a lot of naysayers were like, yeah, AI, that'll pan out in the next decade. Like, I think that's where we're at with quantum. I think that's going to be the next chat GPT moment. There's already been, so much advancement in the space. It's not yet fully commercialized, but the amount of kind of R&D going into it, and, whether it's the US government, whether it's JP Morgan just came out and said they're going to invest in quantum. You have these huge companies like IBM, NVIDIA, obviously. I just think it's going to be the next stage of AI. And actually, the way that our fund is constructed and the way we think about it is that we think about AI, we think about machine learning, cybersecurity, and supercomputing and quantum computing, right? So we're not just banking on a theme working out, we're banking on like these stocks that are already involved in AI continuing to grow because they're going to be further developing quantum computing. So we really think that this is like, 2 years ago, you wish you would have bought NVIDIA, like it'll be the same thing with quantum.
If 2 years ago I bought NVIDIA, we would be in different seats. No, but that's good.
Yeah.
I don't have the quantum stock. I'm personally biased to the QQQY. I love it.
Okay.
But that was my introduction into Defiance, was the QQQY. So
Yes.
it's like it's my child right now.
It's a lot of people's child, and people are very happy with their children after this last month, right? We had a nice, there had been volatility in the market, obviously, for the past month. And so this month you kind of saw these particularly enhanced dividends that we, were able to pay out. And so with those funds, it's basically like you're taking the risk of the underlying index, but then, kind of the benefit or what makes it interesting and unique is that we're selling slightly in the money puts every single day that expire within a day, basically to capture extrinsic value or premium. And, we kind of pocket that every day. And at the end of the month, we distribute it. And so the thought there is that you get, your full extrinsic value. And then, if the index is going up, and you get a little bit of intrinsic value on the movement between the index and the spot price too. And so we just think like, if you look at it too, like and people don't think about it this way, but it's also lower volatility than the underlying index. Like if you look at QQQY, JEPI, and IWMY, the volatility is lower than the underlying index, and you're getting this income. And so it's kind of a smoother ride with these payouts. And that's why people really like those products.
Sure. What kind of impact do you think if the Fed lowers the interest rates by 1 basis point by the 2025, what kind of impact do you think that'll have on your funds?
I don't think it's going to be, so the cash position. So what we do is we have like cash invested basically in short-term treasuries and whatnot. So you're getting like 5% right off the top.
Yep.
Until the cash is deployed to sell the puts. But so you would lose that probably. You'd lose that 1% or so of performance on the cash that sits in the account. And then however that plays into kind of options pricing, I think perhaps you could see some volatility in the underlying extrinsic value there. But for the most part, we think it'll play out more in like just the treasury side of it.
Okay, so a little downside on the treasury, but
yeah, a little downside on the treasury, but then you might get some upside on the equity, right?
On the underlying, yeah.
Yeah.
Okay, so it'll probably equal itself out, you think?
We think so. It's not something that we think is, and of course, like we've been in this environment now for so long that like you actually have to get into the next environment to like, we've been in the high interest rate environment since we launched these products. It's almost like we have to go back to see what it was before. To see what happens, but it's we don't really expect much other than like a shift in the rate of treasuries.
Okay. This isn't a question from X. This is a question from me.
Okay.
Recently, and I'm going to use Tesla for example. Their stock fell so low that they had to. It's a reverse split.
Yeah.
Because the NAV dropped so low. Is that ever a concern of the NAV dropping too low?
Yeah, and I think interestingly enough, like it's not specific to Defiance or these products because again, I worked at a different ETF provider before as well. And when you have products that are returning high amounts of income or performance or whatnot, any kind of shifts or payouts or things like that can degrade the NAV. And so it's a common, kind of like shareholder protection tool, really. You don't want to wipe out the value of a stock, right? And so doing a reverse split allows you to kind of keep the stock tradable in a tradable range and, retains the integrity of trading for the client. So it's a really common tool to keep an ETF tradable, basically.
And do you guys have like a certain percentage you hope to either grow, maybe 2% equity wise, with keeping, with keeping these distributions so healthy as they are? Like, what does your end of year growth look like?
Yeah, so what we're really doing is, the way that we intended for these products to be used is that we are going to generate the highest amount of income we can through selling these options on a daily basis, and then, pay it out. And essentially, to your point, obviously the bigger the payout, the bigger the NAV drop. But over time, it really just depends on the index movement and where it goes. We see it a little bit differently though. The way we think about it is that, that distribution, if reinvested, is really where you get your performance, right? You're buying more shares back at lower prices over time and getting these extrinsic income payments. And so I think reinvesting is really the message that we would give to clients. It's where you see your highest level of performance. But and that's what works best for QQQY and JEPI and IWMY. SPYT, which is an S&P, I'm not sure if you're familiar with that one, but it's an S&P 500 target 20 fund. And so with that one, that's kind of more in line with the question you're asking, right? So with that one, we have this fixed amount that we're striving to pay out, which would be 20% annualized. And, but what we want to do is kind of stabilize the NAV along the way, right? And so we sell credit spreads on that one. And with that one, you're going to have more upside capture on the NAV and lower distributions. And so, that one is more in line with like what happens if, like, will you grab that 2%? Like, we will grab that 2% with QQQY and JEPI. Like, we're not doing anything to hedge the underlying price of, kind of the index itself. It's just pure options, put writing.
And if I think I've watched other videos that you've done. If I understand this correctly, it's like what, 23 hours and 59 minutes. Like, you guys hold it like right.
Yeah, it's one day. It's a day, basically. Yeah.
But it's
I
like
think
right
there was a lot
on
of some of our competitors came out with like, there's been different uses of 0 DTE and 1 DTE, and like, really it's kind of a made up thing, right? Because you can sell these options in a couple of hours, you can sell them, in 20, almost 24 hours. It's, the idea is like very, very short term expiry is the goal. And,
it's a marketing gimmick.
Yeah, exactly. But like realistically, like you're just trying to sell very short-term options to capture, that theta and just the short-term decay and get the highest premium possible. And like, we're okay with however people want to refer to them, like 1 DTE, ODTE. For us, it's just about, it's just short-term.
Yeah, it doesn't really matter.
It doesn't really matter. It's just a hot word right now,
I asked you how to prevent NAV erosion. Is there any way to prevent NAV erosion on IWMY?
It's the same thing. Like, it'll capture upside performance as the index moves up, but you will have NAV erosion. And so it's, reinvesting is really what we recommend there. And, some clients do hedge their own position outside of that, but, we don't really, we kind of set up the fund so that like you have this distribution, it's reinvested, and then over time you're kind of benefiting from that.
I mean, what's stopping someone, say, selling options on, IWMY, so they can actually capture that lower, if they know that once they get these distributions every month, that they could double down, it's gonna fall lower by the NAV. So what's stopping someone from capturing their own?
That's a really good point. Yeah, we've definitely heard that. And a lot of our, to your point, like a lot of our sophisticated options traders are, kind of doing things like that around the dividend. I was told the other day that there's a lot of chatter in, kind of various social media spaces about the dividend wheel, right? And it's like it's playing the dividends of Defiance, of Yield Max, of whatever it might be, and that a lot of people are kind of like very actively trading our products in that way, right, ahead of the dividend, and hedging the downside of the NAV and things like that. So yeah, I mean, I think strategically, whatever a portfolio manager or a trader believes is kind of the right way to use the product within their portfolio, I think is, you know, fair game for sure. So
So
I would say the majority of clients though really do, and just looking at our assets, like the kind of like base number that we float around on stays pretty steady. So it seems to us that most of the clients are actually just like buying, holding, and reinvesting. But you know, I've been on enough of like X spaces and stuff like that to talk to traders who are just very much actively trading it in the way you described.
So I will tell you a little, I'm going to call it a trade secret. I don't tell it. I'm just kidding. I tell everyone this. The only reason I don't do this with Defiance, and I'll be completely honest, is the fact that you are the only fund that shows up in my Schwab account as qualified dividends. Every other,
Yeah, I don't know
I
why it
don't know
does
why
that.
that
That's
is.
a Schwab thing, actually.
Is it a Schwab thing?
Yeah, we're trying to, yeah, it's a Schwab thing. It's some, I've heard that it's resolved on Fidelity. I haven't seen it yet, but yeah, I mean, I've been reaching out to try to figure out what's going on there.
So are they not qualified dividends, or are they qualified dividends?
It depends. It depends. It's broken out. So we send the notice, like if you look on our website and you click on the ETF, you can kind of see like, you know, like the breakdown, right? You'll have like a return of capital, you'll have dividend, and you know, we classify it and show how we report it to them. So we're just kind of waiting for them to you know, like follow that report basically.
So just to be fair, like I did ask the CEO of Rex Shares the same question, and he's like, "Well, I can't really say publicly how it's going to
No,
get
well, because I
reported."
think it could be because they didn't know. I mean, this was only brought to our attention recently. We just
Oh,
started
really?
getting a couple of comments into our info mailbox saying like, you know, how come this one is qualified and that one isn't? And we were like, no, it's the same. It should be the same thing, right? For the most part. And so, yeah, it's true. Like we can't really comment on taxes and how things are taxed and things like that.
Yeah.
But there is like there is a known issue in terms of like how some of this stuff was being reported. And I think it's going to get, you know, kind of shaken out now because, you know, you have the 19A1s, you have the information that we share with the platform. So
Yeah.
it should, I think, you know, get updated, but that was a known issue.
Well, I mean, that's the only reason why I haven't done I'm going to
Yeah.
call it the yield wheel that you speak of.
Yeah. I'm gonna write this one down. Just make sure I double check on it. But
That's a
yeah,
good question. I get a
they're definitely
T-shirt.
phone
I
calls
get
that
a
we were
T-shirt.
making a couple weeks ago to figure out. And, you know, we discovered that this was an issue on some of the platforms. So
I think it's a great issue because if Schwab reports these dividends as qualified, like I feel like I won.
yeah. Yeah.
You know, unlike a lot of the other funds, you know, it doesn't show up as that. It just says reinvesting shares
Right.
in
Right.
my other positions. So I just thought that was interesting. You know, whatever. Let me see. I'm not going to ask that question.
Uh-oh.
No, I will ask it. It's an easy one. It's not a bad one.
Oh, okay.
Theta Noob, that's his username because I don't know what his
Okay.
username is on X, wants to know what your favorite color is.
My favorite color is blue.
Really?
Yeah.
You are from New England.
I'm from Poland, actually. So my favorite color should be like red and white, but
No, you went to Boston College. You're like
maroon and
there you go.
gold. Blue
Fairs,
skies, blue seas, you know,
yeah.
peaceful color.
Fairs from X asked, will QQQY eventually go to zero?
No, because to the point that you made, you know, an ETF company, if you have an ETF at risk of going towards zero, there would be a reverse split.
Yeah. And
Yeah.
what is that number? Is it like 7? What's the NAV?
There's no fixed number. I could be wrong about this. I don't think that there's any particular like regulation that you know where you can or can't do it. But I think most, you know, what I've learned over the years is when you talk to like market makers and traders and investors, the kind of like the happy place of stocks is somewhere around, you know, the low teens to the 60s and 70s level. Of course, stocks trade, you know, look at NVIDIA, right? Like of course, and you know, DXYZ and things like that. Like the stocks trade at very different prices. But yeah, I mean, like usually when you're getting down into single digits is when you're thinking about doing reverse splits.
Okay.
You know, we think about things like, okay, we're close, and then what's another 2% market move and things like that. So it's you start actively monitoring it when you get into single digits.
So here's an interesting question that I was thinking of earlier, and this is going to tie into another question, but the next generation,
Mhm.
we have boomers. Unfortunately, they are going to be leaving us soon with the largest, what do they have, $80 trillion worth of assets under management.
Yeah.
And that all's going to get trickled down to Gen X and millennials. Are you appealing to them?
So this is the reason why we started a company. You know, our initial thesis was our original founder and chairman, Matt Belsky, and I, we actually worked at our prior firm together, and we would be, you know, kind of out on the road and talking a lot about certain products and things like that. We had like an exciting product suite that was differentiated. So we were already used to talking about things that, you know, baby boomers were maybe wary of and things like that. But the younger generations were very interested in those products. But, and so we just sort of started thinking about that and saying like, you know, every time we go to this meeting, you'll talk to, you know, highly sophisticated, seasoned portfolio managers that are very much with like the iShares Classic or the State Street, you know, select sector indices. And it's just a rotation model, and you have utilities, you have this, you have that. And we started thinking like, wait a minute, like if you inherited that, right? Like if one of us inherited that, I don't really want that exposure. I think that, you know, I think that the future of energy is stuff like, you know, hydrogen and uranium and copper. And I think that the future of, you know, technology is quantum computing and AI and machine learning. And so we just thought that like there isn't enough representation of just kind of like blatant next generation sector investing. And that's kind of how we went into this, right? And then of course you let the market guide you and the clients guide you, and some of our ideas, you know, weren't picked up, and others really were. And so I think that we're appealing because we do have those products, right? Like we have quantum, we have 5G, we have a hydrogen ETF, and then, you know, these products are just like dynamic, and particularly options traders love them. So I do think we're appealing for that next generation.
Hydrogen is going to be very tricky.
Yeah.
Very tricky. I was trying to figure out how to desalinate salt water to make hydrogen, but then you end up making chlorine gas, and it's like it's not stable. Like you need so much of it to
You need
produce
so much of
usable
it.
hydrogen.
Yeah.
It's very tricky space right now.
It's a very tricky space, and I think that's being reflected in our ETF, right? Like we're not really seeing any pickup yet. Like obviously the performance is kind of like terrible on some of these things, but you know, you have to take some chances, I think, in this business. And when we started looking at things like, you know, fuel cell technology, like in Japan, like the use of, you know, hydrogen powered, you know, boats and buses and things like that, and just like the pickup of this in California, the interest in electric vehicles, the environment going, you know, carbon neutral by 2050. You know, there are a lot of investors that really, you know, adhere to this vision and believe that these are, you know, kind of the next sources of energy in the future. And, you know, when you look at the data on this, there's a reasonable amount of information that suggests that hydrogen is going to be around, you know, around to stay, and, you know, that we'll see growth in that space. But yeah, I think some things are a trade that works out over time, and then other things like quantum, right? I mean, it's an AI and machine learning ETF really. And so people really took to that because here we are, and now all of a sudden AI is real, right? And maybe for the younger generation, like we all kind of knew what was coming, but I would say for, again, like baby boomers, seasoned portfolio managers, like they're now investing in these AI thematic ETFs, and they weren't doing that before.
Here's something you might not know. I'm assuming you watched The Terminator, right? Long time ago.
I
Did you know
have
that
not seen the Terminator. I'm the worst at movies. Like I am the absolute
you've never seen The
worst.
Terminator?
I have never seen, I don't know if it's like being from like Poland or like, I don't know what, I shouldn't even do that. That's like an insult to my country and all the people who are like movie buffs out there. But like, I take that back. I think it's just a me thing. And it's a consequence of having like two little kids. Like, I don't know. And working really, really hard over the years. haven't seen a lot of those classic movies, those classics, but mainstream popular movies like the Terminator. I've never seen Star Wars. I've never seen, yeah, I don't know. I shouldn't even name them. It's embarrassing, but I haven't seen the Terminator.
So when, because I guess I'm like a middle-aged millennial. When we think of quantum, right, the first thing everyone goes to is the Terminator. Like the
Yeah.
robots are coming to destroy the world kind of thing. And John O'Connor, the little boy, has to basically, I don't know, befriend Arnold Schwarzenegger and save humanity. So I don't know if you know, I don't know if you've ever, so you've never read it. I mean, you've never seen it, so you probably never read the actual book. John O'Connor
No.
becomes Neo in the Matrix. He grows
Okay.
to
Okay.
become Neo. So it's the same author that wrote it, and it's kind of like a trilogy, but not many people know that. But now you have to go watch the movie. Now that's like a
I know.
fun,
Well, then I
you
have to go
have to
watch
go
it.
watch it.
Yeah. Yeah. I will watch it and report back.
Okay. Um, are these funds like, obviously I know you guys are on Schwab. Schwab pretty much owns like everything
Everything.
at this
Yeah.
point, right? Are you guys on Robinhood?
Yeah.
Oh,
We're up
you are on
on,
Robinhood.
yeah,
Okay.
we're up on all the platforms. Yeah.
Okay. I don't personally use
Well, I
Robinhood.
shouldn't say all the platforms, like we're not up on all of the wirehouse platforms, like the classic, Morgan Stanleys of the world, but we're up on some of them. But we are up on all the self-directed trading platforms.
I was because now is there a time delay? Because Robinhood's owned by, I don't remember who they're owned by, but it's like a bigger house, right?
Yeah.
Is there a time delay when
Things
trading
get up. Yeah,
anything? Yeah.
sometimes. Yeah. Yeah, there is usually.
Okay. Because I know depending on, I've talked to other, people on social media that they, I might get my distribution on Monday. They don't get it till Wednesday, and then
Yeah.
you miss the bottom of the NAV, the redistribution.
Yeah, I don't know. It's so some of the mechanics of like the operational side of the platforms is something that I've been just trying to dig into, and again, like because I get emails directly from our clients saying, so and so on Schwab got his dividend and I still haven't seen mine. When is it coming? And then usually the platform is like, oh, we're processing the corporate action. They should see it any day now and things like that. So that's not something that the ETF issuers can control. It's kind of like the platform's policy on how they process corporate actions and payout and the timing and delays and stuff. But yeah, I mean, I have seen those delays. I have.
Is that something you could make a public comment on, as far as like social media, just saying like, hey, it's we issued them today, you guys should see them any day coming forward?
So we issue a press release the night that we announce the dividend.
Mhm.
And that press release often gets picked up by a lot of different, media.
It's on
And
Reddit immediately.
Yes, on Reddit immediately. It goes on, we put it on X, we put it on Instagram, Facebook, and LinkedIn. And we do have there the dates, right? And so it's definitely something that we announce the night before the div is paid, we announce it. Or like the early morning before the div is actually paid, it's announced before
I
the
just know
market.
it just seems like to be a common frustration with all funds.
Yeah.
That people go like, I still haven't gotten my distribution from, I don't know, you can name one.
Yeah.
Why is everyone else getting paid and not I? And that just seems to be like something I commonly hear.
Yeah, no, that's really interesting. I don't, I think we'd have to get, and this is helpful. See, when we do stuff like this, it's like, it gives us things to, think about, but, yeah, it's something, I mean, I will personally actually just make some calls after this and just try to see if there's like some difference in policy or something amongst the platforms that we're up on, but I've seen it my entire career, honestly. And it's never been, it's never been resolved. And we've always, like, the ETF issuers are always kind of making phone calls on behalf of our client. Like, we don't manage accounts, right? The accounts are up on the platform. And so a lot of times we'll say, hey, a bunch of clients called us today and they don't see their dividend. What's the timing? And we're usually just told like, it's being processed and things like that. But the problem is we don't have any like, kind of power or control in terms of how or when it's paid by a platform, but it's always good to, let them know that we hear this kind of feedback.
Mhm. Do you think there is the possibility? So I believe Defiance charges, is it 1%? A 1% fee?
Depend like on the, yeah, on these, but like on the thematics, it's a lot less. It's like 30 bips, 40 bips on
Okay.
some of them. Yeah.
Do you think that going forward, we were talked about capturing the younger generations, that they're not necessarily taking on their dads or their grandfathers, account manager from Morgan Stanley.
Yeah.
They're done with the older generation. A lot of millennials detest the boomers because they feel like they're being lorded over between
Yeah.
real estate and stocks, right? Because they own everything and they
Yeah.
won't let you forget about it. Do you think that they're going to transition more into these like, oh, I don't have to pay John over at Morgan Stanley? I can pay Defiance 1% and get a much better return. I can set it, forget it, and move on in my life.
Well, the trick of it is that, if you're buying our product from John, you're paying, you're paying the
2%.
management fee of the fund and you're paying John, right? So if you don't need an advisor, I mean, I think, it depends on the person, right? I think that so many of us are very interested in markets and trading, and we've done our homework and we feel pretty comfortable managing our own finances. But you have millennials, Gen Z, and beyond that are in completely different industries and don't know anything about, finance or investing. And I think like while X and YouTube are amazing resources for those people, I think it takes some time to, gain a comfort level with managing your own finances really well, particularly when it comes to investment. So I do think that the role of the financial advisor will continue to exist because, I think like, I'm so into markets and trading and stocks and ETFs and things like that. It's like so much of what I think about, right? And then, you often talk to your peers who just like, they aren't in the space and it's just either not interesting to them or they're not familiar with it. And so they really benefit from those advisors. And so I think in that case, like products, and one of the reasons why we priced the thematic products so low, like 5G is 30 basis points and, Quantum, all these other funds are basically 40 bips or so. Is because we thought that next generation would like, some of the actively managed AI funds out there are over 1%. We have one for, 30 to 40 basis points. So we were thinking of that crowd when we priced it.
Mm-hmm. Is there the strong possibility? I don't know if you guys ever do anything with the FIRE community, the Financial Independence Retire Early, but this fund kind of coincides with what they're trying to achieve, where they're like, I don't want to, work until I'm 65 and then die at 78. We want to live now. We want to live for the now. Does this fund kind of coincide with that, you think?
I think it does, but I do think that, well, so I think if you want to actually take the income, I think kind of like a very wise way to think about it is to take a percentage of it, kind of like take what you need to live. And maybe that's, if it's a 60% div payment, maybe you take, 15% of it or 20% of it, and then invest the rest of it back into the fund. And that's the best way to do that. And yes, a lot of our clients are actually using the funds within that, kind of mindset and thesis for sure.
What is the best way to hold this? Would you say it would be an IRA, 401k, taxable brokerage?
Yeah, I think, if you're kind of just holding this long term and reinvesting, then, I think that you're kind of in a good spot in terms of managing, whatever your taxes are until you actually sell the fund or take the income and things like that. But yeah, a lot of our clients use them within 401k accounts or IRAs, Roth IRAs, things like that. I can't actually comment specifically on the tax aspect of it. We're just not allowed to, but
Yeah, no.
but it's kind of like anything else, right? Like stocks that pay dividends, if you reinvest the dividends, you're kind of better off, right?
Okay, but if you take the dividends, would you?
Yeah.
So say they come up as qualified,
Mm-hmm.
right? I like to make the argument that, and I know you can't comment on taxes, but I can.
Yeah.
If say I was to take I don't know, $50,000 a year in dividends and qualified dividends, I'm in a much better tax
Yeah.
standpoint than someone putting it in like a 401k and paying ordinary income tax later on in life.
Yeah, that's true. That's
So
true.
I mean
That's true.
that's how I look at it when I see it, and I go like, I could retire at 45 if I wanted to. I don't have to wait till I'm 65 and a half. I'm a millennial, so it'll be like 78, you know, if Congress has anything to say about it.
Yeah.
I'm trying to think if there's any other questions. I asked you about the Fed. I asked you about, simple breakdown, layman's terms. How are the premiums collected and how is it managed? Is it like an actively managed fund, or do you guys just have the quantum computer set up and they're just?
So it's actively managed. We have a portfolio manager. His name is Jay Pestricelli. He's actually the same trader who trades all the Yield Max products. So, you know, well known. And yeah, he just, you know, has years of options expertise and is just awesome at this. Like he's the king of ODTE and 1DTE. And he'll be the first one to tell you that it's actually a made up term because he is a trader and knows it really well. It's just short-term options. But yeah, every day we just sell options, specifically puts that are, you know, slightly in the money. And, you know, because they expire to cash, like you can't be put the stock, there isn't that level of risk that you have with kind of classic options trading. And so whatever they expire at, whatever they settle to, you collect that cash, you put in an account, and 30 days later we pay, you know, or end of month, I shouldn't say 30 days, it's a little bit less, but end of month we pay it out.
Awesome.
Yeah.
And so we got how the premiums collected. I think that probably wraps it up unless you have any questions.
Okay. Yeah, no, I'd love to, you know, we always love feedback about how, you know, people are using these things, what they like about them, what they don't. So, you know, if anyone's open to it or feels like reaching out, you know, please do so. We love hearing that. And yeah, it's also good to learn about like some of these issues with the platforms and stuff like that. It allows us to look into things. So super helpful.
And where can people find you if they did want to reach out to you and they knew you were gonna like get back to them? I know you're busy.
Yeah, no, you can just write into Defiance. Actually, again, we're a small team, so it's always someone who's like very in the mix that's reading the email, and we'll get back to you. You can also find me on X and all these other places, Instagram, Facebook, LinkedIn.
Okay.
So
All right. And we can
very findable.
expect t-shirts soon.
Yeah, for sure.
It's great. It's great marketing.
Yeah, for sure. We will.
Awesome.
We'll
Well, I think that wraps it up.
Okay, awesome. Well, thank you.
I appreciate your time. Thank you.
I appreciate your time too. Thank you. And
I think the market's going to close soon, so you got
yeah,
the end of day trading to do for Friday. I heard the market took off this morning, but I haven't followed it.
it has. It has.
What are we up?
It has. I'm actually not looking at it right now because we're in our Zoom, but I just it was quite a lot. I mean, I think the last I saw it was like over 300 points on the NASDAQ, and let's see, I'll pull it back up here. It's
That's a good day for Defiance.
yeah, S&P's up 1.3, NASDAQ is up 2.05. Let's see, NASDAQ. I mean, Dow, I don't know, I haven't seen Dow. I think it was even more than that, but yeah, it's a good day for sure.
Awesome.
Good day for sure.
All right, Sylvia. Well,
Crypto's up.
well, happy trading, and
Thank you.
33
too,
minutes
thanks.
left. Let's capitalize on it.
All right, awesome.
All right. Take
Have
care.
a good
Thank you so much.
weekend. Thank you. Thanks so much. This was fun. Thank you.
Take care. Bye-bye.
Bye.